Now here's a report that I found on a site where it tracks previous commitment of trader report. This is from Monday, December 31st, 2007. So what do we got? The hedge funds are long almost 9,000 contracts. They're short 7,005, so they can't seem to make up their mind because they're pretty close, the numbers. Again here on the commercials, their short is 21 and long 19.3. So what I'm trying to get across here is by looking at a series of commitment of trader reports, what you want to focus on, what are the commercials doing? And if you find that the speculators are taking a big long position, the commercials will crush them by taking the trade the other way. If you find the large speculators are aggressively short, the commercials will then go long, and they'll let the speculators build up large positions, really large, until they're all on one side of the boat, and then they'll just move the boat. Here's some more recent. This is October 7th of 2008, Tuesday. So as I was saying regarding the gold, silver, and probably all the other commodities as well as currencies, the report is sent in on Tuesday and is published on Friday. What do we got here? Remember, this is just a few weeks ago. The hedge funds are incredibly long the US dollar. And so they're like 26,000 contracts long, short 2,348 contracts. So they are huge long. What are the commercials doing? Remember, this is the smart money, the bullion banks. They are incredibly short the US dollar. Almost 39,000 contracts short, only 14,000 long. Like, hello, that's a wake-up call. When you see this big discrepancy, the commercials are aggressively short, the speculators are really long, it looks like they're going to crush them all over again. Here's another US dollar commitment of trader report from June 17th of 2008. What I'm trying to get you to highlight here is as the speculators start to build their long positions, that you know from the one that I just explained a minute ago that the large speculators are aggressively long. Well, that was in October. Well, this is June. You can see that the hedge funds are starting to build up a long position in the US dollar, and they're unwinding their shorts. The commercials, the bullion banks, are starting to build up large short positions relative to how many contracts they're long. So as the speculators get long, the commercials will get short, and then you can see what's happened from there until today, where they're completely at the opposite end of the boat, and something will give, I would suspect, very soon. This is the most recent one that I found from last week, October 7th of 2008. And let's quickly look at what we got. The large speculators, enormously long, 26,000 contracts on the US dollar index. Short is only 23.48, very aggressively long. The commercials are 14,000 long, and they're almost 39,000 contracts short. So you can see this is building up. The longer the speculators, and this is why you can't predict what's going to happen in a week or a couple of days. As long as the speculators keep buying more long contracts, the commercials will just quietly, patiently sit, and they'll keep buying more short contracts. And eventually something will give, and when it does, all of these speculators are going to panic, and what are they going to do? They're going to sell, and that's going to make this short position by the commercials extremely profitable. A last quick comment, by the way, on all levels, the US dollar index is overbought. On the RSI, it's just under 70. On the MACD, it's at the top of the range. On the slow stochastics, it's probably about 83. Stochastics, 90.13 between the fast and the slow. So it's between 87.26 and 90, incredibly overbought. And here's the Canadian dollar. I just printed this chart last night, so it's like, what's the date? Maybe October 14, 15, something like that. Canadian dollar is oversold, due for a rally. The MACD oversold, due for a rally. And the slow stochastics also just basically at the 20 level, 20 to 22.2, something like that. So the idea is you want to buy 20 and sell 80. That's the basic premise. So it's all set up at any time the US dollar could head back down. Who knows what's going to happen over a few days or a few weeks? That doesn't really matter, but long-term trend is the important thing. Here's a last comment I think that's kind of interesting as the cycle develops. It's a fairly accepted premise now that we are in a super cycle for oil, gold, silver, commodities in general, like copper, zinc, lead, molybdenum, probably uranium as well, with the number of nuclear power plants that have to be built. So if we look forward on this, here's something that's quite interesting. If you were to have put money into the US market in the year 2000 from Canada, you invested there because their currency is so strong, and at that point people thought Canadian dollars gone forever. The investment in the Dow or the S&P is down about 23% as of the October of 2008. So you've lost there. You lost on the currency transaction to buy, because at that point our dollar was worth only 62 cents US. In the 9 years since then, the US market is down, say 20% to keep it simple, but the currency is down 50%. So 50 and 20 is 70. So I mean, you've just got absolutely massacred. So here's my thought. Going forward, with the commodity supercycle, I fully expect, as the US dollar goes into a terminal decline, that the Canadian dollar is going to become enormously valuable as a currency because of the tar sands with all the oil, the natural gas, the gold, the silver, and on and on. So as our currency strengthens, foreign capital, which is a lot of money by the way, when that money decides to get into the precious metals market in wave 3, which is just starting sometime in the next few weeks probably, the major buy signal is actually around September the 10th, but these ships take time to kind of get rolling. But as that cycle develops in the wave 3, where do you think those foreigners are going to buy those gold stocks? Do you think they're going to buy in the US? Because if you buy the stock and it goes up, but if the currency collapses by 50%, you can't win. But if you buy Canadian gold stocks, you win because the gold stocks are going up, and silver and platinum, and on and on and on. So you win on that basis, and oil as well. But you also win because the Canadian dollar is going up. So that's a win-win. So remember, the risk when you invest in a foreign country is how will the investment do, but also how will the currency do. So because our currency is going to be in an up cycle, the US dollar is in a down cycle, the commodities are in an up cycle, that's a double win, and I fully expect that Canadian dollar strength is likely to go on for quite some time.